Regardless of your trading strategy, be it a smart money, price action trading, moving average, or any indicator combination that you are using as a forex trader, key zone and level are fundamentals when it comes to trading forex. You can have the best strategy, but in as much as you keep trading from the wrong zone, you will keep losing money. And that is why this topic is very much important to you and for you as a trader. Understanding key zones and levels when it comes to trading will make you become a profitable trader. In this video, I'll be sharing with you in details all you need to know about how to identify key levels and zone when it comes to using the indicator, which is the moving average. And in the subsequent video, I'll be sharing how you can combine your moving average and your indicator window in order for you to have excellent profitable result. I'll be breaking this in a very simplified way that even as a beginner forex trader, you will be able to understand every concept and apply this in your trading journey. So going to the setting of the indicator first, I'll be setting my moving average on my main chart, and the period is period 20. So I'm starting from the list. The period is 20. The method is exponential, and I will change the color of this indicator. Okay, let's leave it at this red. So I will save it. Now add another indicator. My second moving average indicator is going to be period 50. The method is still exponential. I'm changing this color to blue. Then I'm adding another indicator, the moving average again, and the period is 100. Method is exponential and the color will be black. Then the last but not the least is my moving average, and the period is 200. The method is exponential, and I will change the color to gold. Now if you've done the setting correctly, these are the indicators that I have just set up. So here are the indicators. So I won't be explaining the setting of the indicator window, which is this one, since we are not discussing that in this video. So in the subsequent video, we'll be explaining more on that. Let's proceed into the application of this. Now, how do we use this particular moving average? As you can see, the red moving average is period 20. The blue moving average is period 50. The black moving average is period 100. And the gold moving average is period 200. Each of these moving average serves as a zone. Each of these moving average serves as a zone. Depending on the price situation, this zone simply means that you are expecting price to come to this moving average, give you a particular pattern, and then you find your trade entry. So the only disadvantage of this moving average that you need to take note of is the fact that this moving average is not suitable for a ranging market. It is only suitable for a trending market, which means that anytime price begin to range, you need to be patient enough for the price to give you a direction, because a ranging market is a directionless market. So now let's look at this. This is our moving average. 200. The last pullback we will want to see is at the level of the moving average 200. So what that means is that anytime price is above the 200 moving average, it is seen to be an uptrend. So which means that obviously we are using the moving average 200 for two functions. One, to determine the trend of our market. Two, as our deepest pullback, which means that no pullback is expected to exceed the 200 moving average. For instance, in this first scenario, price respects 100 EMA, which is the blue line, and that is a bullish candle. You bought from here and price took you off. Another time the price pull back and come to the zone of this 100 moving average again, which is the black moving average, and you can see the price took off from there. So price will continue to go deeper. The more the strength of the participant get weak, the more the pullback get deeper. What that implies is that at initial stage, you will realize that the zone of the pullback will be at moving average 20. Subsequently, you see the pullback gets to the level of 50. As it proceeds, you can see that afterward it begins to respect 100, which is the black moving average. Then over time, it begins to respect 200. You can see that this now was a pullback to the 200 moving average. So in a very strong, healthy trend, you will always see price respecting the 200. You can see now from here, it begins to respect the 100. But look at this scenario. Then over time, once it begins to pull back to 200, you should note that from this zone, there is a tendency for you to know that the trend is getting weaker. And there is a high probability of the trend changing direction. But anytime price is above the 200 moving average, expect a pullback, any pullback zone. So what are your trading zone? Your trading zone is 100 moving average, 50 moving average, and 20 moving average. Any rejection, any price action confirmation you get from that zone should be your buy or your sell entry confirmation. But once the pullback begins to get deeper, just as in this scenario, you see the pullback got to 200 and it went up a little and it came back, you should begin to think of a possible change of trend. It will get deeper on the 200 and you will observe that the remaining moving average will begin to cluster together, just as in this scenario. You see that the 100 moving average, the 50 moving average, the 20 moving average will begin to cluster together. In that scenario, you should know that price is about to change direction. Let me show you this again. Now, this is crash 500. Look at in this scenario, the price is respecting the zone of 20 period moving average. So one of your zone of entry is 20 period moving average. Remember, identifying key zone. In this video, I am not saying you should buy it, but let's understand the concept. Then secondly, when you see the gap, you can see this gap between the period 220 and period 50. The gap between period 50 and period 100. Anytime the moving average is not clustering, you should know that the market is in a healthy trend. There is enough volatility and price will move massively in that direction. So you see this pullback, that is our entry. Here we have our second pullback. You can see now, in this case now, the pullback defied the 20 moving average, defied the 50 moving average and pulled to the 100. Now, anytime your pullback goes beyond this 100 and it begins to go to 200, you should know that the strength is getting weaker. 80% of the time, the first pullback to 200 zone will play out, but any subsequent one will have a high tendency of breaking the trend of the market to the opposite direction. So let's look at this and see how this plays out. Now, look at what I said earlier. I said 80% of the time it will play out. All right. So you see this comes to 100 moving average and it gave us a pin bar candle formation. So this is your buy entry and here is your take profit. If it pull back, you will be looking for opportunity to buy or to sell when price pull back either to the 20 moving average zone, 50 moving average zone, or the 100 moving average zone and the 200. Now in this scenario, we have this break, price already closes below the 200 moving average here, and then we'll have this pullback. So the first pullback you will be having is to 200 moving average zone. You can see that and you see your entry. Look at this again, another pullback into this zone, another sell entry. You can see that. After that again, another pullback to 50 moving average, another sell entry. You see, another pullback again to the 100 moving average, another sell entry. Now it is going deeper. So we know that the trend is getting weaker depending on the zone price progresses to. You can see here now it pulled back to 100 again and it returns. So it's getting deeper. Now you can see, and after that indication, it now crossed to the upside. This is very much fundamental when it comes to trading the moving average. This pattern goes on and on and on. Look at this. After every cross of change of direction, you can see this price cross above the 200, giving us an uptrend. The first pullback is to 20 moving average. All you need to do, you get your pin bar candle or your engulfing candle, you'll be in this buy trade. You can see how that price plays out. But when it was on a downtrend, look at this. This pullback did not respect 20. It pulled back to 100 moving average. And I told you, anytime a pullback deeper, it's showing you that price is about to change direction. Please do not forget this as long as you are trading using the moving average. Once it begins to get to 200, is a 80% to 90% probability of change of direction, and you can see that happens here. So please, let's always pay attention to that, and I will show you more of it again and again and again. You see, in this scenario, it went above, pull back to respect this zone, and the next is that it break out of this zone, but eventually it returns back. And I told you that once it break the 200 or pull back to it, there is a tendency of subsequent reversal, and you can see that when it comes the next time, it break out of it, and that is a reversal to the other way around. I believe you have got this clearly and correctly. In the subsequent video, I'll be sharing in detail how we'll be doing our entry confirmation in this zone with a combination of our TDI, which is our indicator window, the Traders Dynamics Index. This method is more simpler because it has to do with the moving average compared to the smart money concept. But however, if you know the smart money concept, you can still incorporate it into this. The advantage of the moving average is the fact that it helps you to escape price manipulation. Thank you for watching, and if you are yet to subscribe to this channel, please do well to subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And please do not forget to give this video a like, share, and turn on your notification bell so you don't be the first, so you'll be the first to get notified when we upload our next video. I don't want you to miss any of this series that we'll be sharing, and this, I believe, will take your trade to the next level. Thank you, and see you in the subsequent video.